In this market update, I'm going to talk about the fundamental shift that occurred on April 2nd and what it means for future investments. Good morning. I hope everyone is doing fantastic today. Well, we're seeing a sea change in the markets since April 2nd, which Trump called Liberation Day when he put on all those tariffs. And we are seeing a major change in the markets, but we think this is a change that was going to occur anyway. It's just happening more rapidly. And let's look at what we mean by a change in the markets. Well, looking at the chart since April 1st, you can see here that if you're in US stocks or bonds, you have a negative return. Bonds, longer term bonds are down 5.5% with TLT, and small company and large company are down about 7%. However, notice there is one difference in the markets that's actually positive, and this is the sea change we're talking about. Look at international securities. This is the EFA index. It's actually up 0.59% in the month of April. And that's a big part of that has to do with currency. So let's look at this chart here. This is the euro versus the dollar. The euro, since the beginning of April, is up over 5%. So big reason for the return difference is currency. Having your money overseas and other investments is actually paying off now, but we think this is just the beginning. These cycles begin, and when they begin, they last for a long time period. And that's what this chart is showing. It also shows the returns in different markets over that time period. So this is looking at November of 2000 on the left-hand part of the chart, November of 2000 up to July of 2008, when the euro did very well versus the US dollar. And then that time period, that 8.5 year time period, the S&P 500, your total return was only 5% over 8-year time horizon. EFA was up 57%. Notice emerging markets up 282%. As at the end of July of 2008, then a lot of people were saying you have to invest in the BRICS. Brazil, Russia, India, China, South Africa, that's where you're going to get the returns. Well, you got the returns. A big slug of that return was because the currency was going up versus the dollar. Notice what happened the next time period, and this is one of the longest droughts we saw in the US dollar. From July of 2008 all the way to 2002, October of 2022, that 12-year time horizon, 12, 13 years, the dollar fell versus the euro. And what happened? Well, the S&P 500 was up 299% over that 13-year time horizon. However, international securities were only up 46% and emerging markets were only up 20%. They lagged significantly. So now what's happening, because of Liberation Day, there's more demand for other currencies, and we're going to see that this is a long-term time horizon. We're expecting international emerging markets to do much better than the rest of the market here in the United States. One of the things I think is pretty interesting is looking at what is gold. There's a lot of interest in gold. We're at all-time highs. And one of the things that you've seen is that GLD, which is the largest ETF, one of the largest ETFs that owns actual gold, is at an all-time high in assets under management. So they have over $100 billion now in this fund. So it looks like, hey, we've had a big increase here. Well, we're higher than we were in 2020 in total assets, but that doesn't tell the whole story. What's pretty interesting, looking at this chart here, you can see that gold, which is what GLD owns, is up 73%. The assets in GLD itself is only up 29%. That's a gap of almost 40%. What that is telling us is that over the last 4 or 5 years, people have been selling GLD in their portfolio, because if the assets under management should be up to where it is just by the gold in the portfolio. So this is saying that there's been drawdown in gold. Now there is some interest in gold, and we're actually seeing more money going into it, and that's probably going to propel it for the future. Gold is not only inflation hedge, but gold also does well when the dollar is going down versus other currencies, which we expect for a long time period coming out here. So, In conclusion, if at this time you want to make sure you're diversified, especially away from U.S. large company stocks. This is a time that you want to have more money in international. We're seeing a lot of funds do not have, or investors do not have a lot of money in emerging markets or international. And think of it as an auction. Now we're going to see more demand for those securities, and you're going to see those prices go up. If you have any questions or concerns or need help with your investments, reach out to us at thorwealthmanagement.com or give us a call. Take care and talk to you in a couple weeks. Subscribe to the Thor channel today.